So here's the real question.
Right.
If things are bad as crazy right now, and you are a trader, not necessarily even a long-term investor, but a trader, let's just say you're thinking about where to put your money. I'd actually love to hear about it in the context of being a trader, but also actually as a long-term investor. What are you supposed to do in this environment?
Well, I'm going to watch the Fed on Wednesday. If they treat these numbers, which were material events, they're very material. If they treat them with nonchalance, then I think it's just a green light to bet heavily on every inflation trade. The idea that inflation is transitory, to me, is that one just doesn't work the way I see the world. So I look at $88 trillion of assets under management by asset managers. Of that, $670 billion are invested in commodity indices like Bloomberg Commodity Index, Goldman Sachs Commodity Index. That's about 0.75%. If I rewind just to 2011, when inflation was peaking at 3%, not CPI at 4.9, those same investors had 1.2% of their assets, which would imply today, if they just got back to weight, another $400 billion of buying in commodity indices. And if you, certainly the impact models that we run would argue that GSER or BCOM would double or triple. So you've got, if I just look at where asset managers are, 60-40 types, the one thing that they should be invested in, they're not invested in, probably because they're hearing these assurances that inflation's transitory. So you've got this massive short, really, in the commodity complex, a massive short there. So that makes me think that, and I look at the balances in a variety of commodities, and they're all so razor thin. They're all so razor thin. And this is just what happens if institutional money would get to where they should be, given the level of real rates. What happens if the Reddit crowd ever gets into commodities? God forbid if the bullies, the financial markets, ever were to take it on, for instance, like retail did back in the 70s.
Explain what you mean by that.
What I mean is that commodities are finite supply, small markets, generally speaking. And if we ever get an inflationary psychology, like, for instance, we did when I was in my 20s, back in the 70s, if we ever get that again, and if you ever got retail actually nervous about inflation, then the one thing that leads inflation, which is commodity prices, it's the easiest tautology there is, those things can literally scream double or triple with no problem whatsoever.
So you're worried about the Reddit crowd getting involved in commodities right now?
No, I'm saying that right now, I would be a lot. Look, I think I'm the most conservative investor in the world. That's a hedge fund manager by definition. Hates risk, loves edges, loves competitive edges, does great reward risk trades. I would be really concerned about arguing that inflation's transitory when I know that you've got, look, think about it. We have a just-in-time mentality. We have inventories at record low. We have demand screaming, and we have people who are really underinvested where they should be, given the valuations of a variety of financial assets.
You said if the Fed doesn't make any moves this week, that it's going to be a green light.
Well, for me, it would be a green light.
But the question is, so it may be a green light temporarily, but you're also suggesting that there's going to be a hard stop at some point, that it's going to create an even bigger problem. And so how is a long-term investor think about that?
Listen, I have maintained, I'm so happy I don't have to run a pension fund. I don't know how you'd invest those assets when valuations for both interest rates and stocks are at, if you combine the two, they're so overvalued. They're at 100-year highs. I don't know what you do. I know one thing I'd want to do is the one thing that can hurt that is inflation. I'd have as many inflation hedges on as I possibly could. I sit on, the investment committee of these not-for-profits, and it's really difficult to try to explain to some of the board members of our not-for-profits, gee, maybe now's not the best time to be invested in a variety of finance. Maybe we should own commodities at this stage of the game. Right. Can I just say one last thing? The December 2018 meeting, if you think about that meeting that the Fed had with pretty much the same board makeup, they had a lot of incoming data between that meeting and the one prior to that. Stock market was down 12%. GSCI was down. Commodities were down 20%. The credit markets were frozen. But they went on and hiked because they were locked in to this linear belief that I can have a forecast and that we should stay with it. The predictability was more important than reactivity. So I think they had the same, and 7 months later, they had to reverse course and take that back. I think we're confronted with exactly the same situation right now.